very good afternoon. You're watching Closing Trades on ET Now. I'm Anita Jain. With me is Ajay Sharma. And the closing trades for now are the shade of red. And very strongly so. If you look at the market right now, the Nifty is just around that 19,550 mark. So the expiry pressure is something which is really coming into the market. And look at that move on an intraday basis. We started at the highest level, and since then there has been consecutive selling pressure that we have seen. No buying on dips as of now. India Wix, that's taken quite a bit of spike. Of course, it's expiry, but a lot of data points lined up with the MPC in the coming week, the GDP data, jobless claims data, PCE data, and much more lined up. Of course, auto data as well. India Wix, as a result of that, it's up 11%. Almost a 200-point slide is what we have seen from the highest point. All sectors are trading in the red, but it's Reliance, ITC, and Asian Paints. They are leading the fall today. So these are the maximum contributors on the downside. So heavyweights again pulling the markets lower. IT2 is one of your worst performing sectors. Ahead of those Accenture numbers, we are not seeing any shade of green or any enthusiasm for now. Whether it's a Kotak Mahindra, whether it's other names like HCL Tech, Infosys, they're all down and out. And down and out is also the mid-cap and the small-cap space. Of late, we have seen the outperformance, but not today. And even the rollover data that we have seen so far, Ajay, not very exciting.
Actually, you know, the point which you made needs a little more emphasis, that the highest of the session today was made in the first half hour of trade. So when we started off the show in the morning, you may recollect, we were putting a lot of emphasis on the point whether yesterday's rebound will actually last. It did not last. The probability that it wouldn't last was high to start with, and that's the reason why we talked about how dollar index surging to 107, yield surging to 15-year high, and the Brent, of course, knocking at 97. All of that was negative for emerging markets as a whole, and India, which is a very large user of crude and, of course, dependent on dollar flows. All of that seemed to be weighing in on the market. We have Kunal and Nuresh also joining us. So, Kunal, to talk about technicals a bit, from 20,200 or thereabout, we have come down to 19,500. I was just looking at the chart that it appears that this time we won't respect the 20 DMA on the mid cap, small cap either. So this leg of the fall which has just started is taking along the small cap, mid cap along. Previously, small caps were very resilient.
Correct.
So that seems to have changed. Do you see this beyond expiry? This pressure could tomorrow, of course, nobody will come start buying. Maybe the next week.
Yeah, so typically what happens, Ajay, is that on the expiry day or just a penultimate day towards the expiry, if the force of selling is pretty much high, it definitely impacts the rollovers for the for the futures, both for the indices as well as stocks, starting off the next series. Only then, if we have some sort of a positive data point, is where the positions start to get taken into the stocks as well as on the indices. Now the fact is that in the first week of October, we have a lot many events, global events as well as domestic events lined up. So that would probably add to more volatility for the indices. So I don't expect an immediate settling of the index, both from a near term as well as from the next 1 week perspective. I think till the time the events are not out of the way, I believe that the India VIX would probably keep on rising further. Maybe we could probably expect a 13.5 to 14 plus mark for the India VIX, and that would probably subside the index movements.
I think we're at the lowest level that we have been this series. Is that the case? Are we ending towards the lowest point?
Yeah, I think 90,500, yes.
Yeah, and that's the question actually, Naresh, to you as well. From this lowest level that we are seeing this series, do you think now that there could be a case that the FI positioning is on the lower side, their ownership is just around that 45% mark, maybe come the month of October, we'll see a bit of a bounce back? Or is this a structural weakness which is going to take us to 19,300?
So as of now, given that today's expiry, it is tough to take a call, because if you look at the contribution today, most of the downfall, the two top losing sectors are IT and FMCG. Now, these are generally the defensive sectors which have been hit. For the last 3-4 sessions, the downtick was more so contributed by HDFC Bank, and today that is the stock which is flat. So every day we've just been seeing a slower and lower drift, and volatility in a small band. So it remains same. 19,500, 550 remains a support. So from this area, if we break it on a closing basis tomorrow, that is where we expect more weakness. As of now, at this point of time, it would be a buy at current levels with a strict stop loss at 19,500.
Sabharwal also joining us on the show. Afternoon, Sandeep. Finally, the chickens are coming back to roost. Sandeep, the much expected correction, do you see it play out before we can even talk about a bottom, or coming back to the market or dipping our feet again?
So essentially, all of us know that from the March lows, Nifty moved up 20%, the mid-cap indices moved up nearly 35%. So after such sharp moves, corrections are imminent. Now, what will create the correction? Different things create correction. Sometimes global factors, these crude spikes, or reasons come for the correction, and that happens. So, and in the global context, we have outperformed significantly. So, although we might have corrected 3-4%, I think that's one of the lowest fall from the top for any major market. If you see the European markets, most are down 8 to 10%. US markets around 6 to 8%. Stocks in China are languishing near multi-month lows, etc. So I think we have done relatively better, and that leaves the scope for some additional correction. So I would think that I'm not looking at a very deep drawdown, but let's say 19,000 kind of market should be a base case at which we can start nibbling in, and potentially if the global weakness becomes more accentuated, we could also fall somewhat more.
Just wanted to discuss the paint stocks as well with you, Sandeep. Of course, we've got the somber news that the ex-leader of Asian Paints, Mr. Ashwin Dani, is no more. So, of course, that's one factor. And we here at ET Now would like to pay tribute to him as well. The stock is also down around 4%, but not just Asian Paints, it's actually also Berger Paints, which is down. But Ajay, an important name in the paints industry, who associated him with Asian Paints synonymously, and a big loss.
What a name. I mean, he was an industry leader, which everybody can look up to. And the family, in fact, he joined his father's business in '68. And as a very junior level guy, exactly the classic case of how, great practices. He joined the company at a very low level, worked at the shop floor and then grew. And later on gave the company for kind of a professional management. But we used to meet him. I remember Nikunj and I used to meet him every now and then at the ET Awards. Yes. And he would be nursing his drink. And he would tell us everything about and he was very on the ball as far as the industry goes. And it's a big loss. I mean, it's just part of the life. But what an admirable, company they have built together. And a lot of people would be kind of looking up to him today. Some of the finest CEOs, I must say. The Pidilite current CEO.
Yes, Mr. Bharat Puri also
used to. Yes, he's junior.
Correct. Yes, of course. He was earlier part of the Asian Paints team.
You know that before Pidilite, and they would now, say cheers and over the ET Awards. Amazing memories, Mr. Dani, of course, now not with us, but admirable company. And he leaves behind a very big legacy for sure.
Well, yes, a very big legacy. But as they say, the show must go on. And as far as the paint stocks are concerned, let me just take a view from you as well, Sandeep. The emotional factors aside, for the sector and the stocks, it seems like there is more negative news than positive, at least on the front of crude as well as what's happening to the raw material.
So I think the bigger concern for paints companies, so normally it's an oligopolistic kind of industry, so they would be able to pass on price hikes, etc. But this time, the entire spike in raw material prices is coming at a time when Grasim is making a huge entry into this segment. And to that extent, they will not have pricing power. So what will happen is that on one side, competitive intensity is increasing. Second side, you are getting hit by higher raw material prices. And on top of that, you are unable to increase prices, as Grasim obviously will try to make an aggressive entry and take away decent market share because they've invested so much. So I think it's a perfect storm of sorts, and the writing's been on the wall for some time for the paints industry. So many of these companies will again become a buy at some stage. When is tough to predict, but maybe a year from now. So I will not be looking at paint stocks at least for a year, or if these stocks actually end up falling 20% earlier than that, and at that time we can reevaluate.
Stock which is actually becoming a beneficiary of, there are two parts to it. One, capex in traditional and legacy energy. L&T is a beneficiary, especially hydrocarbons in Middle East. But Middle East now is going about putting a lot of capex in renewables, and there too L&T has a play. Today a fresh lifetime high and there seemed to be completely defined trend. It appears that there is institutional buying wanting to position in that name. Sandeep, is there a kind of a, that moment where capital allocation was set right at M&M and it rallied from 700 to 1500? Is there a kind of a new light in which Street is looking at L&T now?
They should, because see, the fact of the matter is it's the largest EPC construction infra company of India. It's been making inroads into new segments and gaining significant orders from overseas also. And it's today sitting on a huge order book, a relatively very strong balance sheet, I would say, much stronger than it's ever been, and it doesn't have debt issues at all. And out of the asset ownership business, where many companies have got trapped into BOT, etc. So, and it's an underappreciated stock. So even at these highs, if you actually look at fund portfolios, so you'll see that relatively ownership of L&T has gone up, but still most funds, top large cap funds are dominated by HDFC Bank, ICICI Bank, Infosys, TCS, ITC. So I think that's how the top holdings go, while the best performing sector actually is capital goods. So I would think that if the markets weaken significantly, L&T will also correct. So I think that will give people who haven't allocated to allocate in our large cap portfolio. This is the biggest holding.
Holding when it comes to your large cap portfolio, and that's L&T for you. So that's a big news maker today. Just wanted to quickly highlight a couple of other news buzzers. Medanta is in focus because Motilal Oswal has initiated coverage with a buyer. The target is 840 rupees. They're on track to scale up their capabilities at Patna and Lucknow, and that's the reason the sales are expected to grow at a rate of almost 15% over the next 2 years. The other one is MCX, of course. The new derivatives platform will finally go live on October 3rd. This is something we have been tracking here at ET Now very closely and had told you that this is likely to happen in October itself. In fact, but we spoke with an analyst today, Amit Chandra of HDFC Securities, to understand the implication and why there is this excitement about a new software coming on board. What could be the EPS upgrades and the impact on the P&L? Listen in to what he had to tell us.
You see the price correlation to the volume, it has been around 55% over the last 10 years. This correlation has come down to 12% in the last 3 years because of the uncertainty around technology. So I think with in the last 6 months, the option volume has almost doubled. And if you see YOY, the option volumes have been 3x YOY. Okay, so the impact of the higher volume will start to reflect in terms of revenues. And we are expecting around 47% CAGR in terms of options revenue from FY23 to 26. So, in terms of our estimate, we are expecting 15-16% growth in terms of the total revenue on a normalized basis.
Sandeep, I wanted to ask you, today, as I say, overnight, Morgan Stanley put out a note in US saying that this rising yields and dollar rally would actually be very disadvantageous for emerging market stocks. You've seen all of this play out, the kind of relationship overseas cues, global macro cues have with Indian stocks for a very long time because of flows. 15 years back is when US yields shot up to those levels. How vulnerable are we now? Or you think drawing previous historic example may not be apply anymore and we are much more robust?
Specifically for India, we are much more robust. If you look at our forex reserves, if you look at our overall trade or current account deficit vis-a-vis what forex reserves we hold, our entire inflation dynamics vis-a-vis what used to be there earlier, I think things are totally different. Secondly, this broking house come out with reports at the peak of the cycle. Now the dollar has been rallying for so many months. The bond yields have been going up for so many months. So now, when we might potentially be at a threshold where there could be a potential reversal or from, let's say, the US 10-year bond yields from around 4.75%, they could actually be looking to reverse. It makes sense coming out with such reports.
Sandeep, but time now to slip into a very short break. But as we do that, listen in to what Vikas Khimani had to say on Senco Gold. Of course, he has positions in that counter. What made him so positive? Listen in, and then we'll slip into a very short break.
So it's a consumer discretionary space, very well managed company. Recently went public. We participated in IPO. We like the management, we like the business, and more importantly, I think valuations were reasonable when we bought. So risk reward was very, very favorable. And markets were not excited about the IPO, but we were very, very, very positive. Looking at the overall opportunity space, and it has given great returns in a short period of time. We never expected this kind of return in such a short period of time, but markets had its own way of surprising both upside and downside. So we will remain invested in anything which we like from structural point of view.
Welcome back. Well, the slip is just getting exaggerated for the markets right now. We are now threatening to go below 19,500, just around that 19,530 mark. Of course, as we were talking about, its expiry, so the last half an hour, 45 minutes will be very crucial to track. And to add to that, there will be that flows on account of the Nifty rebalancing as well that might come in. Let's see which way things go, because for now, it's not looking very pretty. The pressure is, of course, coming in from heavyweights, Reliance, ITC, and to add to that, you also have Asian Paints, which is down, and the banking names, especially the large private bank names, are not doing much at all. But within this, there is one pocket which is actually outperforming. Let's pull up some of the cable stocks. RR Cable has suddenly spiked up. You have Finolix Cables, which is doing quite okay. Polycap is just around the flat line. There was, of course, a brokerage note this morning talking about the management meet takeaways from that as well. But the overall sector seems to be doing quite well for itself. And that's the point we actually raised with Hemang Jani as well. Listen into what he had to say on cables, and then we'll take the discussion forward with Sandeep Sabharwal as well.
So I think this wire and cable segment has displayed very strong growth over the last 2-3 years, and given the kind of surge that we are seeing in the residential, commercial real estate activity, and the kind of renovations that people are undertaking, there is going to be a significant growth for sure. I think what we must understand is that the upgrades through various means, renovations and the new sales which is happening, there is going to be a significant, uptick, particularly for the better upgraded, higher capacity wires and cables. So I think both for Polytech as well as RR Kabel, the growth trajectory is good. Yes, valuations we can debate, but wherever there are certain niche companies operating in a particular space where the earnings visibility is 20-25%, people do not mind paying high valuations. So I think one should have a positive bias for these names.
In fact, the valuation table would also come up on your screen that Havells and RR Kabel is quite highly valued within that range. KEI are still 25-35 times, but 45-55, and there are some smaller names as well. But we'll talk to Sandeep with this around this. Sandeep, the tailwind exists, that is fine. Growth is good, quality, profitability, but 40 times, 50 times, what kind of money can investors make by entering at these levels? What are your thoughts on wires and cable?
Yeah, it's very tough to make money out of these stocks from these valuations, simply because of the fact that these are essentially commodity industries. Obviously, branding plays a part, and to that extent, that's the reason why some of them, like Polycab, has a good brand image, so everyone wants to buy that as long as the premiums are not too high. But finally, we have to realize that these are more or less business-to-business sales. So on the retail side, people actually don't go out and buy. So brand value has a value, but not. We can't give them valuations of a Britannia, Dabur, or any of the FMCG kind of companies, at which they are trading now. So I think there is nothing on the table actually for investors. So I think in speculative up moves, these stocks can rise, but from a purely fundamental standpoint, doesn't seem to be anything on the table.
Okay, so that's the take coming in on cables. Of course, can't generalize and difficult to kind of put all of them in one basket. But Sandeep, I wanted your views regarding the banking names. I know you've never been positive about PSU banking names, but even the large private ones, HDFC Bank, Kotak, your view is not really positive if I go by what your Twitter handle is throwing up. So are you suggesting just completely avoid the banking names at least? And what about NBFCs then?
No, it's not that. It's just that valuations matter in the market. So sometimes when there are secular up moves, people forget about valuations. And then whenever there is some small negative or there is some speed bump, then people suddenly realize that yes, valuations matter. And that's led to this phase where some of these stocks which created huge wealth, both HDFC, Kotak, they were taken away from that for 10, 12 years, right from 2009 till 19. For the last 4 or 5 years, they've done nothing. So I think that's a valuation adjustment which is happening. From Kotak standpoint, there is no significant negative. HDFC faces a lot of headwinds related to its integration and impact on margins as liquidity becomes more and more tighter. So I think we have to give it time. So at a price, it will be a buy. So I don't think they are buys right now. So let them correct. These are good, well-managed banks, and we'll buy them at our prices.
Waiting for that price, but let's ask our charters as to which is the price that becomes a buying level for these big stocks, Naresh, the likes of ICICI, Kotak, Axis, even HDFC.
I would be avoiding HDFC Bank and Kotak till the time there is no major reversal. Axis is the one which is the most promising name out of all the names. If you look at the price stock, the price chart, the stock had made a top around 960 in 2023 start. And for the last 4 months, it had made tops around 990,000. Even today, in all this correction in Bank Nifty, the stock has been holding on about 1,000 levels. So clearly a relative outperformer and the new leader. So Axis could be the one which could actually surprise on the upside going forward. ICICI Bank has also started losing its leadership status by not sustaining above the 940, 960 mark. But still, till the time it holds 920, the stock looks okay. But I would go with, out of all the banking names, large cap ones, Axis Bank looks the most promising one.
Looks the most positive amongst the large cap banking names. But what else is happening in the market? Not much actually. Of course, you have Nuvama Wealth. Since its listing, it's been down. Karur Vysya Bank is also down about 5%. Berger Paints, Tech Mahindra, Asian Paints, Marico, they're all coming under quite a bit of pressure. In fact, Kunal, this entire FMCG basket hasn't been doing much. And suddenly the paint stocks, of course, we discussed it with Sandeep as well. He's talking about the pricing pressures and the competitive pressures. But would you use these dips as a buying opportunity? Because post monsoons, once the festive season starts, historically we have seen a decent amount of momentum.
Well, for the paint stocks, yes, but then my chartical or the technical sense on many of these paint stocks, and I'll stick to Asian Paints and Berger Paints, have not been bullish because many of these charts have actually shown signs of major resistances. They've shown flawed breakouts on the upside. The breakdowns also have been very, very subdued for these names. So I believe that these are the charts which are actually going into a distribution kind of a pattern over here, and we are talking of it from a longer term basis. So like 2021-22, Asian Paints was almost at 3,500 levels, and the stock is still at 3,100, 150 mark. So I would probably expect that the stock would continue to underperform. In fact, my sense is that maybe over the next 1 to 2 years, we may actually see many of these paint stocks going to a sharper correction. So I would not be much enthused into buying this odd correction of 4-5% into these names, even for the FMCG names. In fact, the move which started off, I think, 1 month prior to the market top in the month of July. The FMCG stocks were the first ones to actually go into selling pressure. Many of these FMCG names like Britannia, HUL, etc., they had already corrected 10% and more from the FMCG pack. And even after this mild bounce of recovery for the indices, these stocks have failed to recover. So that's also an indication that the weakness for FMCG stocks should persist and continue for some more time.
Okay, so the weakness in FMCG names might persist for some more time. Sandeep, on that note, we let you go. Appreciate you joining us on the show. In fact, let's take a small breather on the show. As we do that, listen in as to what's happening in the cement sector, because of late there has been a lot of positive headlines about price hikes coming in, but we discussed with the sector experts as to how sustainable can these price hikes be and what's the outlook on the growth going forward.
We are still maintaining that projection, because we see certain developments happening, especially limited to us as well as on the market scenario in the second half. As we all know, people in the cement industry bank a lot on the demand during pre-election season, that would, I think that volume, that demand is yet to pick up. One should see that will kick in, I guess, from next quarter. And if with that there are price corrections, and then I said there are company-specific, factors. With that, I think we are maintaining our 850 projection, near about 850s. We are fairly stretched on our capacities. Okay, some of our existing units, only place we have to ramp up is a new unit which has come up in Maharashtra, Mukutban. But if you look at our other existing units, some of them are operating at close to 100% capacity. So we are not seeing that sort of a ramp up for us specifically. People who have got spare capacity, who have added on new capacity during the year, they might have, so therefore they have, I think, headroom for a higher increase if demand supports. But we are quite happy with our 12 to 15% kind of a growth.
Rather than a direct exposure, what we are recommending is play the cement story through Grasim, because that's where bulk of the value comes in. So currently, I think the holdco discount is fairly high, almost about 45 to 50%. The other story which backs our positive reco on Grasim is that the standalone entity, which is VSF and Chemicals, is bottomed out. At least in China, we are seeing from the bottom, there is a 5% plus kind of a recovery in both these prices, caustic soda as well as VSF. Cement, as we know, demand continues to remain good, of course, and the fact that pricing sentiment is improving, that should be a good tailwind. So large caps, we are recommending Grasim, and the mid cap plays, we find JK Cement to be very attractive.
Plunging quite a bit, 19,500, just about 10-12 points away from that, 15 actually. So there's no attempt of intraday recovery, one-sided, trending day on the downside. Amit is here with the details of the NSE rebalancing, which is likely to happen. So Amit, tell us.
Nifty or the NSE rebalancing will be effective from September 29, but the flows or the passive flows that are expected to come in will happen on September 28, which is also the FNO monthly expiry day. Now, the key stocks that one should keep an eye out for, firstly, is HDFC Bank, because inflows are expected to come in close to around 760 odd crore rupees, and this is owing to a weight increase in Nifty and Nifty Bank. Now, apart from HDFC Bank, Shriram Finance would remain in focus because around 520 crore of flows are expected, which is nearly 2 times its 20-day average. When it comes to trend, flows of around 465 crore expected, which is nearly 4 times its 20-day average volume. And when it comes to TVS Motor, Zydus Life and Page Industry, TVS Motor and Zydus Life, flows of around 160 to 360 odd crore is expected, which is more than 2 times that 20-day average volume. Page Industries is one stock which would see an outflow of close to 70 crore rupees, which is nearly 3 that 20-day average volume. And from the Nifty CPSE index, Power Grid would remain in focus because that is expected to see the highest inflow of close to 530 odd crore rupees, which is nearly 1.7 times its 20-day average. So keep an eye out for these stocks in trade.
Thanks so much, Somit. We are watching out for that, but for now, those flows are not supporting the market moves and the stock moves. So even HDFC that you pointed out was going to get a lot of flows, is of course doing better than rest of the peers, but not like by a whole lot, still into the red, but just mildly so. We also have Dilip Bhatt, and I want to pick his brains about what he's thinking about IT, because Accenture will come out with its earnings. But let me quickly first kind of set the context as to what we are expecting. It's the Q4 earnings for Accenture for FY23, and then we'll get the guidance for FY24. Fairly critical to track that, because that will set the context of what the global spends are likely to be over the next 12 to 18 months. And that's why I'm closely watching out for what the commentary comes out of that one. Managed services is something which has been doing okay for them. It's SNC, which is strategy and consulting wing, which has been very weak. It's expected that the managed services will kind of offset the weakness there, but the commentary on demand will be fairly important to track as well. The healthcare business for them is doing okay, but CMT was weak. So again, the commentary on that. Commentary also on the digital wing and generative AI as an opportunity, because right now AI forms only 0.5% of their order book. When will it actually materialize into numbers is something to track. and headcounts as well, because last quarter, in fact, we had seen 19,000 jobs being cut, and that was a big signal of the slowdown that they were anticipating. What are they doing right now is also important. For now, the street is penciling in that this quarter there'll be a 4% growth on a constant currency basis year on year with a 20 basis point expansion, and for FY24 the guidance will be 3 to 6% kind of growth in constant currency on a year-on-year basis, and the street will be okay with even just that. Dilip, looks like that the era of those double-digit growth is going to take time to come back for the IT companies.
Well, I think in IT companies, we have seen a lot of things happening, a lot of events that have taken place. And I think in a sense, it is changing the picture a lot more than what we earlier thought. In a sense, it is a lot more dynamic. Earlier, we all were so bullish about digital, the cloud, and all those things. While those things still continue to be on the radar, I think the AI has taken the front seat at the moment. And possibly that also is going to change a lot of things, especially in terms of how the IT is going to address this particular issues, especially on the headcounts. So I think taking that thing into all these factors into account, and also the very fact that none of the IT companies have given any great guidance, my own sense is that a lot of it has been reflected in the prices. So I don't think there is going to be any negative surprise there for IT, as far as I think. A lot of it is already in the public domain and reflected in the prices. Going forward, I think there's bound to be some kind of positive news which will trickle in sooner or later. And I think my own sense is that it will take maybe 2 to 3 quarters. But at the current levels, the IT companies are not underpriced also because they have moved up also. But at the same time, they can provide a good defense to your overall portfolio, because most of these IT companies are very well-managed companies. They generate a decent amount of cash flows. Every year, they generate a good amount of cash. At the same time, I think the IT companies also have a very decent ROEs. So I would say that from here on, I would still hold on to the IT companies and use it as a part of resilience to my overall portfolio.
Okay, point taken. So that was about the IT companies, and we're watching out for those Accenture numbers. But what we are also watching out for is the auto sales data, which will be out in a couple of days over the weekend largely. But of course, the street will start reacting to that much ahead of that. Let's go across to Shrishti to get the sense as to how the pre-festive sales have been and what are we expecting from the month's sales data, Shrishti?
Well, yes, pre-festive sales was seen across the segments, and this time festive cheer from two-wheelers to passenger vehicle, commercial vehicle, and even tractors have done well for the month of September, because we had Ganesh Chaturthi festival, which accounts for 8 to 10% of the overall festive sales, and good number of bookings is what they have witnessed, good numbers of sale is what they have witnessed, especially coming in from the urban markets. Let's have a look broadly from the segment-wise expectations. So passenger vehicle on your screen. So Onam saw 20% growth for festive to festive basis, and this time around Ganesh Chaturthi, a lot of deliveries happen, especially for their top end models. But the good part for the customers is that the waiting period is now seen to be reducing. There has been elevated discounts for the smaller car segments. From the two-wheeler segment, pre-festive inventory is at highs. Other than that, some of the top models from the likes of Bajaj Auto as well as Hero MotoCorp, some of the new launches have done well. Inquiries have been robust, but Eicher Motors can't take your eyes off, because the deliveries has been great for this month as well. From the commercial vehicle segment, improvement in the freight demand after a lean monsoon is what these companies have witnessed. A lot of inventory buildup is also happening in the anticipation that the prices of these vehicles will increase further. And from the tractor division, if you see, then there must be a decline on a YOY basis because of the high base, but because keeping the election season in view, a lot of subsidies and a lot of positive triggers for the tractor industry, and on a month-on-month basis, we are expecting a super jump. Let's talk numbers then. And from the passenger vehicle segment, M&M 3% uptick on a month-on-month basis is what we are expecting. Similar is the like for Tata Motors and for Maruti Suzuki. Approximately 1.9 lakhs of unit is what we are expecting for this month. From the commercial vehicle segment, have an eye on Ashok Leyland because that is expected to outperform its peers in terms of the month-on-month growth, and therein we are expecting a 16% jump. From the two-wheeler segment, like I mentioned, that it could be a single-digit growth, but the demand has been good from the urban markets, and key to watch will be Eicher Motors, where in this time the sales expected is at 84,800 units approximately. And lastly, from the tractor division, the tractor sentiment is holding strong. A lot of state subsidies with respect to giving the boost to the tractor industry is what we have witnessed in the month of September, and going ahead that sentiment is expected to continue, and for this particular month we are expecting a jump of 80 to 90% month-on-month basis from the likes of Escorts as well as M&M. So festive cheer across the board is expected to be seen for the auto sales data.
The auto sales numbers, but no, market is not really looking at any of those right now and only nose diving. Dilip, it's the Visarjan time in Mumbai and people are already talking about it, right? That market is reminding that please be on time, leave your offices early. Try and leave your offices early, otherwise you'll get stuck, and the screen is telling you #Visarjan.
Well, I think the screen is showing that people are already stuck up midway through. So I think the immersion is obviously, I think, a very important event in Mumbai. But for markets, I think it has been a sea of red today without any doubt. But typically, as what we all were expecting, that there has to be some kind of correction, some kind of healthy correction that market should go through. I mean, quantity-wise as well as time-wise, there has to be some kind of correction because we all know there are enough challenges globally which have just sprung up. Domestically too, there are enough things on hand to challenge the markets at the moment. So all said and done, I think all these factors will play its part, and maybe the FII buying also has reduced dramatically. Rather, in September, we have seen a good outflows in September. So all said and done, I would still feel that markets, one need not be in a hurry to buy. One can wait and watch, and one can still get a better levels downwards. And if not downwards, at least sideways, one can get some better levels. So I would say that, yes, wait and watch for the time being because markets are good, and even at the current level, index-wise, I mean, much ahead of the intrinsic fundamentals.
Talking a little more seriously, I mean, look at the India VIX. That has shot up 10-11% intraday at day's high. Pull up India VIX till that actually cools off, or after the expiry, 12% now. Look at the intraday India VIX and you will see what I'm talking about. Right from the beginning of the session, it has only been going one way. Nuresh, do you expect it to cool off in a day or two or tomorrow?
So it will be better off to take a view tomorrow itself because today is the last day of the month. There is a lot of rejig happening, a lot of volumes in the last half an hour. So out here, a little bit of a spike was necessary. We've been on the lowest side of the VIX for quite a long period of time. So finally, we got some volatility, some downticks on the Nifty. Yesterday was an uptick. So overall, let us see from tomorrow, but I don't expect a major spike up as such because globally, we've not seen a similar spike as such.
Quickly also track the data in terms of the rollover. The situation is as of 2 p.m. what we heard was that the Nifty rollover was 65%. Bank Nifty was a little stronger at 69%. And in terms of individual counters that had seen high rollover were Atul as well, Infosys, MFSL, Cummins. These had seen high rollover, while Cipla, Madison were the ones which were seeing low amounts of rollover. But overall, with the market setup that we have at our hands, Kunal, what would be your view in terms of what the traders should be doing right now? Any trade that you would want to recommend?
Well, I think in terms of strategy on the indices, I think it's good time to pair the risk from portfolio. I think we've been advising this last couple of days, even when the indices are sideways, to pare down the risk of portfolio because, sudden jump in VIX which has happened today. So, what's actually happened is VIX has crossed the 200-day moving average for itself. And the last time I think we'd seen the VIX crossing about 200 DMA was in September 2022. From there, the index formed a top, a couple of months from there, and we saw a sharp correction for a span of the next 3 to 4 months. So I'm not expecting a similar kind of a correction, but then it's always makes sense to pare down the risk from portfolios. In terms of stocks which I would recommend at current levels, I would look out for two differentiated calls. One would be a potential breakout. Ipca Labs, the stock looks attractive, now trading at 920 odd mark, so would look out for targets of 975 for Ipca Labs, stop us at 900. And Gujarat Gas, apparently the stock has been beaten down significantly, so would go for a contrarian buy. The indicators are hugely oversold for Gujarat Gas, so targets of 430, stop us 405.
Okay, so those were the BTSC trades coming in from Kunal, Ipca Labs as well as Gujarat Gas. Naresh, let's have your BTSC calls as well.
So, continue like the PSU basket. ONGC looks interesting with the crude rally as well. A stop loss at 186, target price of 193. Second is a Bond Power Grid, which is again setting up for an eventual breakout. Would keep a stop loss at 197. Expect a move towards 204 plus.
Two biggest drag on the market, Reliance and HDFC Bank. Guys, just pull up the last 6-month graph of Reliance along with HDFC Bank. Until HDFC, that's the peak at the time of announcement of the demerger, and after that adjustment. But after that adjustment too, the stock has come down. No returns in the last 6 months. HDFC Bank too would have done around the same. Topped out around 1650 and then come down. At what levels would you be comfortable in taking a long position in these two, Kunal, RIL or HDFC, or any of them at all?
So I think RIL and HDFC both have come back towards a good technical support point. Now, maybe these stocks may not bottom out immediately, but the pace of drop into these stocks should slow down significantly. So, even for HDFC Bank today, for example, the stock has not fallen as sharply as what we probably would have anticipated maybe a week back when the market started to show signs of a drop down. Even for Reliance Industries, I think the first half today was actually quite decent. The stock came back towards 2,385, 400, and then from there it slipped back again. So it's not a heavy negative day for Reliance Industries, but it's just that the impact from the intraday highs is denting the sentiments that maybe the stock may not form an immediate bottom. But I believe that at current price levels, both Reliance and HDFC Bank could actually be very good buys.
Point taken. So there's still very good buys from the current level as well. This morning there was another note that came in on the EMS segment, which is the electronic manufacturing segment, and they were talking positively about Keynes and Sirma. Yes, there has been a deferment when it comes to that import ban that the government had initiated on laptops and other bits, but the overall structural story of the manufacturing in the country and the China plus one kind of theme coming in remains very positive, and that's why the brokerage house was very positive on Keynes and Sirma. Both of those stocks have managed to buck the trend in an otherwise very weak market. We should pull up the intraday charts if we can of Sirma SGS as well as Keynes Technology. And Dilip, your view as far as this entire manufacturing rally is concerned? On one hand, the valuations have become very, very punchy, but then yes, the opportunity size is large.
Well, I think this entire pack has been riding quite high on the incessant flow of very positive news for the macro on the macro basis as a whole, whether it's government encouraging, whether the kind of orders which these people have, so the visibility that these people have, whether it's Keynes, whether it's Sirma, whether it is Dixon, I think all of them really have a very good visibility without any doubt. The challenge, of course, remains is that what to do with the valuations. Having said that, I don't think at these current valuations and looking at the market, I would be too comfortable to buy any of these stocks from the current levels. Rather, I would prefer to wait and watch, and maybe even if it doesn't correct, but still wait and watch for a while and then decide whether one should enter. But from the current levels, yes, if you're having, maybe you can hold on, but certainly I wouldn't recommend a buy from the current levels because they are pretty expensive.
Would you buy, what kind of auto ancillary name would you buy in this decline? Because mid cap, small cap melting has started. If we go further lower, 3 to 5% on the index, a lot of them would offer. What names do you have on your radar in auto ancillary?
That's for me?
Yeah.
Well, I think in the auto ancillary space, once again, it has been, there are too many moving parts that is happening in the auto ancillary space. So one has to be a little more careful because a lot of dependence on the external markets still continues. And whether it's Bharat Forge or Motherson, I think any of these companies, if you take in the front line, their dependence on the external exports is pretty high, and their sales overseas also is pretty high. So I would say that in this entire pack, tire segment still looks pretty interesting. Maybe in the short run, because the oil is going up, it can give some kind of a headwind for them. But I think the tire segment looks pretty good because the replacement demand seems to be coming back in a big way. So I would look at tires segment within the auto ancillary space, and maybe some forging companies basically which are focusing on the domestic consumption. So I would really look at some of those companies. So I think it's a mixed bag, but as what I said, in the auto sector itself, with so much of upheaval taking place because of the EVs, one has to be a little more careful, and also because of the over dependence on the exports.
Stocks is what you like, but separately wanted to pull up what Nitin Gadkari had to say. Of course, in construction equipment, he was quite positive. He was saying that the government is looking at incentivizing construction equipment manufacturing. The incentives will be based on the use of alternative fuel, which has been a focus area for the government. The policy is ready. They're just waiting for the final approval. And on account of that, the likes of Action Construction or even Sanghi Movers and other equipment manufacturers as well will be in focus. But just coming back to the point on tires that you were making, Dilip, we actually spoke with the management of JK Tire to try and understand how they are managing this pressure of higher raw material prices versus the replacement demand. Listen into what Mr. Anuj Katuria had to tell us.
There are, indications of the crude oil, but as of now, that has not reflected in our input material costs. But we are watching it very carefully, and we would be kind of, keeping those things in mind. But as of now, as I said, all the input material costs, whether it's natural rubber or others, are all range bound. In case there are any major changes, which we do not anticipate as of now, we would have to again take pricing action. When it comes to the OE, most of the OEs, especially in the passenger car segment, we have indexation with the raw material. So that gets taken care of to a large extent. In the replacement market, what we are seeing as of now, we are approaching the festive season. The demand is looking great, especially both in the passenger car as well as in the commercial vehicles. We would expect that, in the next couple of years, say by FY26, we should see the long-term debt reduced by another 25 to 30%.
All right, let's take stock of the damage. Or is there any BTST attempt happening on the index here? It is 19,492 was the lowest as far as Nifty cash goes. So almost 40-50 points kind of rebound. What is the most attractive part of the market, Dilip, in your view? Or you would wait for screaming value before actually allocating fresh money?
Sure, I would wait for a while. I think whether it's mid-cap, whether it's frontline, I think all of them have really fared exceedingly well. Maybe a few here and there have corrected, but by and large, I think they are still trading in an overpriced zone, as what I would think. Long term, of course, they are very good, but if we are trying to navigate the medium term, I think one should still wait and watch, in spite and despite the fact that today the corrections have happened, and possibly it will happen. But I think markets possibly will give you some time to enter at a later date, maybe index-wise and even time-wise. So there is no need to buy. And I would say that, if you were to ask me a few favorite sectors, yes, pharma looks pretty good and pretty interesting from the current levels. I think the construction and the infra space looks pretty exciting because of the order book and the kind of spending the government is doing, which is very adequately reflected in the fiscal deficit that we are talking about. So I think infra space, the pharma space, I think both sector really stands out. Looking at the long-term prospects, though they have also run up quite a bit in the recent time, but these two sectors look pretty promising.
A couple of sectors that you like, but pull up some of these platform stocks or the new age stocks, case in point being MapMyIndia, even Anayaka for that matter, Policy Bazaar. All of these platform companies are seeing a good amount of traction. Dilip, do you track any of them and would you make a bet?
So I think within this space, Zomato, which has moved up quite a bit, still looks pretty interesting. Looking at the current, the last quarter and the kind of cash that they have, and the kind of cash burning that has been significantly reduced in this particular company. So Zomato still looks pretty interesting. I would say that one should look to enter this particular stock on a longer term basis. Rest all, I would still prefer to wait on the sides rather than be in a hurry to really comment.
There is one stock that you like. For others, it's a bit of a wait and watch. But for the market, it is not a big wait and watch. 19,550 is where we are settling for this month of September in terms of expiry is concerned. So at least from those levels of below 19,500, we have managed to show a bit of a bounce back. The big question, of course, is where we go from here on, because a lot of factors at play, whether it's the crude, which is at 97, dollar index, which is past 106, the GDP data, the auto sales data, PCE data and MPC, lots really lined up, and the current account deficit number that we got intraday today wasn't looking very healthy as well. So the probability now stands at 80% or over 80% to Fed hiking rates in the month of November, and I'm not sure whether the global markets have managed to digest that fully and price it in or not. So that was the macro setup that we have for us at this point of time. Sectorally speaking, all the sectors have managed to end in the red. IT is the weakest of the link, followed by FMCG, media, PSU banking names and autos as well. Naresh, a quick word before we wrap up the show for the day. A word on the auto names. Anything that you would see as a clear high conviction buy?
Not really, but on dips it would still be Mahindra and Mahindra, and closer to 170.74. Ashok Leyland looks like a good entry price, which is where I would expect a bounce from.
It was about Auto Angs, Pharma. That was the other favorite that was emerging. Kunal, your favorites?
Well, I'll go with a fresh breakout name over here. Ipca Labs is something which looks attractive from current levels of 920. Sun Pharma, I think, has gone through a time-wise correction. I don't expect any major momentum coming into this stock pretty soon. Cipla is something which actually looks attractive. I think the stock has corrected more than 7-8% from the recent swing highs, closer to 1150-60 mark, the last I had seen for Cipla. So I think that's an attractive bet to be taken at current levels. Most of the other names like Glenmark, Zydus Life, etc., these stocks have started off their phase of correction. So maybe another 5%, 7% downside for these stocks. And I think then they could become a lot more attractive.
Okay, that's the names coming in from the pharma sector. With that, we let you go, gentlemen. Thank you so much for joining us, Naresh, Kunal, as well as Dilip, for helping us tide through the last 1 hour, which was very, very volatile. But at least it's the end of the session. That's happened at around 19,550. My guess is for the series, we're just pretty much flat. Maybe we have a tinge of green left, because the last month of August was, of course, very bad for the markets, wherein we saw a cut of 2.5%. But other than that, May, June, July had seen solid gains, and September would be a bit of a flat month. Having said that, for the day today, it wasn't a great day. Any sector you pick, whether from an IT to an auto to an FMCG, PSU banks, banking names, they were all down and out, and red clearly was the color of the day. Even the mid-cap and the small-cap index, which have been otherwise outperforming, gave up today and ended in the red. And look at that advanced decline ratio. When we started off the day, it was comfortably in the green, completely reversed. India Wix also saw a very sharp spike of almost 12% intraday. Having said that, what managed to stand tall was L&T. That's going as your top gainer at the index level. That UBS upgrade and target price of 3,600 definitely aiding sentiment. And then Bharti Airtel, ONGC, Coal India was some of your other gainers. On the losing side, Tech Mahindra, LTIM from the IT pack ahead of Accenture numbers was weak. Asian Paints, Berger Paints was coming under pressure as well. And from the broader market, it was MCX that deserves mention on that 8% rise after officially announcing the date of the new technology and the new software that they're putting up on October 3rd. MapMySystems and some of the cable companies like Finelix Cables, RR Cables managed to buck the trend. But that's how we're ending the trading session. Thank you so much for being with us. We'll catch you tomorrow morning.